quite unusual for us to provide an intra-month update as to where the funds are and how performance is looking, but we've received a number of inbound inquiries over the course of the past 2 weeks in relation to the tariffs that were announced on the so-called Liberation Day by President Donald Trump. So we wanted to provide the investor community with our views as to A, the tariffs, and then B, what we have done for the portfolios and how we are currently sitting from a performance and a positioning perspective. So firstly, on the tariffs, we noted the tariffs being announced on the 2nd of April 2025. The team immediately debated the merits of the tariffs and concluded that the three major implications were going to be higher prices for consumers on the ground, lower corporate profits because your costs were effectively going to be going up, and a general reduction in trade all around the world. So net, it was very clear that it was quite negative. If you add that to the fact that the S&P 500 was currently trading at a forward earnings multiple of 20 times relative to its long-term average of about 16 times, it was quite clear to us that there were more downside risks than upside risks given the tariff announcement. So what did we do for the portfolios? On that day, we aggressively purchased a significant amount of insurance in the form of put options. This materially reduced our equity content and completely hedged out our US exposure for the funds. On the second day, we bought additional insurance because we thought that the implications were going to be quite bad for the rest of the world, and we wanted to have as little equity content on the table as possible at that point in time. Our worst fears did come to the fore in the ensuing week post the announcement of the tariffs, and the markets completely fell out of bed. So it was quite good for us to have that protection at that point in time to provide the funds with that downside protection. As we've explained in the past, these put options give us two things. The first thing is you have that downside protection, which protects the funds in a declining market. And the second thing is it gives you the capacity as well as the confidence to go and buy shares when the rest of the market is extremely fearful. So that is exactly what we did during this period. We were active buyers of many companies in the US that we really like and where the valuations were substantially more attractive than they were in the 2 or 3 weeks prior to the announcement of the tariffs. And in addition, we have been systematically selling the put option insurance to realize the gains that we have made on those specific instruments. So on reflection, it is quite clear that these put options are very, very effective tools to manage the risks that we see on the table at this point in time. It is important to note that these tools are not available to other fund managers who are either benchmark cognizant or do not run hedge funds where mandates are sufficiently wide for them to take advantage of these types of opportunities with the tools that we have at our disposal. So I think being a hedge fund in this environment is a fantastic place to be and allows us to manage risks highly effectively. So from a portfolio positioning perspective, post all the changes that we've made, we are currently sitting back at similar levels of net exposure to where we were prior to the announcement of the tariffs 2 weeks ago. We then need to speak about performance, and I think that's where it gets quite interesting. So because of the use of these put options, the high growth and the pure hedge funds are currently up by approximately 1.2% and 1.5% respectively for the month. This compares to the JSE All Share Index, which is down by about 1% where we stand, and the S&P 500, which is down by 5% for the month. So it is an extremely fluid environment as we stand today, but the team remains on the lookout for these macro events that can create significant risks for the portfolio. And we hope that this update provides you the comfort that we continue to look out for both the risks as well as the opportunities on the table to optimize fund returns. Thank you.